Rock Daniels, the Bluegrass Realtor, here to talk to you about the housing market volatility. Now, the housing market is sometimes volatile, but in recent data, it suggests that we are currently seeing a uniquely volatile market. Now, rates on mortgages, they're hovering right at or below 7%, which has been a little bit of an improvement, but is still bouncing up and down, leading to a mixed bag of news for the housing market in general. Now, home inventories, they're surging in certain markets, and a lack of affordability is curbing some of this demand. Now, this video, we're going to explore the latest data and trends in the housing market and delving into the reasons behind this volatility and what it means for investors, realtors, mortgage bankers, and the average person who's just trying to buy a house. All right. So according to Black Knight, after dropping in January, the monthly payment required to purchase the average home jumped by nearly $100 by the end of February. Now, at current income levels, it now takes just over 33% of the median income to make those payments. Now, 24% of which is the 30-year average. Now, this lack of affordability is a major factor in curbing demand for homes. Now, the least affordable markets include Las Vegas, Nevada, Nashville, Tennessee, Seattle, Washington, Miami, Florida, and Los Angeles, California. Now, Las Vegas is seeing a particular surge in inventory, which is up to 100% from last year. Prices dropped in January, but then rose into the first week of March. However, even with prices rising, homes are going for well below the list price. Now, a lot of people moved from California to Las Vegas thinking that they could be where they were going to live in their no state income tax haven. Still, after COVID, many of them were called back to work, which has led to inventory piling up in Las Vegas. Now, Diana Olick visited an open house in Las Vegas last week and noted that just 2 sets of buyers came in 3 hours. Well, this lack of demand is a worrying trend for the housing market. Now, other markets that were some of the hottest markets in the first part of the pandemic, such as Phoenix, maybe Tampa, Charlotte, North Carolina, are also seeing a decrease in demand. Now, this trend highlights the volatility of a housing market, which can be subject to many different factors. Now, while rates on mortgages are still relatively low compared to what they could have been years and years ago, there are still credit dynamics and lending dynamics that suffer in the back of what is going on. Now, banks are not giving more money away now due to recent volatility in the market. Now, as a result, standards are expected to tighten up even more. The affordability dynamics are a significant factor contributing to this volatility. Now, despite the rates on mortgages being lower than they were 20 years ago, the average person is struggling to afford the payments required to purchase a home. All right, so the home builders index was down 2.25% on a day when rates plummeted. Now, highlighting the negative impact that this lack of affordability is having on the housing market. Now, investors have been trying to find the bottom of the building market, but the problem is that with the lack of affordability, it's challenging to see who will put their home up for sale and when. Now, if you have a 3.5% mortgage, and you refied, you need to get some equity in your home to make it worthwhile for you to turn around and sell it to buy something else that's going to be 7%. Now, this lack of demand is limiting the opportunities for home builders. All right, so there is a small population of millennials out there who are looking to buy homes, and there aren't enough existing homes that are being sold. However, there is some concern about input costs, and as labor markets haven't softened up, the copper prices are almost near 10 to 20-year highs, and although lumber prices have gone down significantly, the inflation of the stickiness part of the PCI cycle have been trending upwards, and there's not a whole lot of relief on the gross margin side. Okay, so overall, there's valid concerns about the state of the housing market. The market is already watching a yield curve this week, and there is a growing concern that a hard landing, not a soft landing, is on the horizon. We will see what the overall affordability of housing is going to be, especially after the March 22nd Federal Reserve meeting, where they are probably going to raise interest rates by at least 0.25%, but probably 0.5%. Now, my name is Rock Daniels. I'm the Bluegrass Realtor. Take a moment, click that subscribe button so we can continue to stay connected and we can give each other information. Thank you so much for stopping by today. I look forward to seeing you again soon. Have a great day.